Suppose a group of strangers came up to you and said, I have a company that doesn't do much of anything, but sometime in the next 2 years, we'll merge with another company. I don't know what that company is yet. Would you invest in the stranger's company? What if I told you that if the strangers complete a merger, they get to pocket 20% of your investment? That's essentially what a special purpose acquisition company, a SPAC, does.
That's SEC Chair Gensler taking aim at special purpose acquisition companies in an online video. Interesting new way of communicating. Actually saves some firepower against pipe investors who he argues are getting a leg up on regular, normal, I guess, investors, he says.
And I know we're going to David on this, but this was such a breath of fresh air. I mean, this is Chairman Gensler.
Jim, that does not sound like a man who thinks highly of SPACs. I mean,
he trashed them like you wouldn't believe. He buzz-fed them.
Yeah, BuzzFeed is one.
No, this was a remarkable video. Must be watched.
The question is, I mean, we've had him on. He's been on with us. We keep waiting. We know these things take quite a while, but do you have any expectation that something is coming soon from the staff and that we will actually see additional regulation and then where it may be focused?
He's betting it's a chilling effect situation. Mm-hmm. That there are responsible people who say, I don't want to be on the griddle when the chairman takes aim. Like he says, well, let me give you an example. You don't want to be that example. This was horrifying. I mean, if I were running a SPAC right now, I would just say, oh, my, I got to solve this.
There are so many out there, and we'll get to that.
How many have been found?
We'll get to all the numbers.
I mean, not everything's DraftKings.
No,
right?
I mean, listen, Gensler, new rules around marketing practices, tougher disclosure requirements, better alignment. Of course, we've talked so often about the alignment of incentives between the SPAC sponsor and the investor. That said, many of these SPACs right now are trading below their $10 issue price. Many are an opportunity because you can redeem, remember, at 10 or even sometimes $10.20. There's a bit of a yield available to you, and then every so often you hit the jackpot, a la DWAC. The Trump SPAC, as we call it, that I know a couple of people who owned it. In fact, they agreed to be part of the initial underwriting and got warrants and other things as a result of that to get the deal off the ground. And then it hit, and it was look what happened.
But is that a lottery ticket?
Yes, it's a lottery ticket. But why not own a lottery ticket if you know you're locked in? You buy it at $9.80 and you know you're going to get 10 or 10.20. So that's happening.
But what happens with the BuzzFeed, David, which is down so much? What happens?
I talked for weeks, remember, about redemption rates and how they weren't disclosing them immediately and how important they were. This is another example of a company with BuzzFeed where I think it was 94% of shareholders chose to redeem, get their money back, leaving very, very little in the trust account to go to the company than was originally anticipated to help fund its continued growth. And that has worried people. And so BuzzFeed shares, as you see, have been very poor. Any number of other names have been quite poor. And then we have the winners, the Lucids of the world that are sixfold from what their issue price, or at least have been at some point, and created a massive amount of market value. By the way, we've got another big deal today.
What?
I don't know if you noticed, Getty Images. Now, there's a real company.
That's a real company.
It's a real company.
To recommend that.
It's about a $5 billion deal. It's Neuberger's SPAC. They're talking about an enterprise value there of $4.8 billion. It's about 15 times on an enterprise value to what they anticipate adjusted EBITDA will be for next year. So there you at least, you're not talking about out years, 26, 27, 28, where you've got this huge sudden jump that we often see in these projections to cash flow positive from negative. Here you've got a business, obviously, that already has a significant amount of EBITDA. Choosing the SPAC route, though, to go public as opposed to a straight IPO, $150 million pipe there. But, guys, this has been one of the phenomena of the year, and it's not stopping. Our friend Neil Danick's over at, we call it SPAC Analytics. I mean, he says this thing is just a machine. You've got 23 SPAC IPOs already to December 9th versus 62 for November. So December's running hotter. You've got 591 IPOs so far now coming in 2021. And, Jim, to answer your question, 568 are seeking a deal. I mean, again, it goes back to this idea of how do you chase that many opportunities, and what do you do, and what are you willing to offer in order to get your deal done, given you as the sponsor still are in a position, to Mr. Gensler's point, to make money even when the stock falls well below $10. And as we know, even though redemptions can be very high, these deals still get approved and rarely renegotiated.
Remember when Dave Cote started with Vertiv?
Yes, great SPAC.
What they looked for, they had a business they wanted to buy.
There are
the
deals.
Other way,
There's
right?
no doubt.
They
There
had
are
a business
deals
they want to buy the business
that are good deals and that represent potentially good value over time, that have good management teams. But it requires a lot of focus from the investment community in order to. And so, with so many out there, it's hard, Carl, to know where to even go.
I hope that Gensler succeeds and people watch the video realize it's a racket.
Well, Shepard Smith here. Thanks for watching CNBC on YouTube.